Good evening, everyone. This is Financial Literacy 101. Even though that the market's down, even though that we're in this downtrend of all of these stocks are essentially people are losing millions and billions of dollars, whether in your retirement account, your personal investment account, your 401ks, your 403bs, whatever investment vehicle that you may have, you are losing hundreds and thousands and millions of dollars because you decided to sell your stock. And as I've been telling you, at the current moment, your philosophy, your mindset should be holding your stock, if not buying in more stock to increase your personal portfolio. Because downtrends like this, when the market is in a recession, so to speak, then you should be buying up the market like the millionaires and billionaires. This is the reason why they own millions and billions of dollars, because during a time like this in the market, they go buy the market. There's many ways that you can buy the market, whether it be ETF or index funds or individual stocks themselves. But we're going to get into it, and I'm going to give you a couple of stocks that I've really been hearing big investment engines talking about, even personal YouTubers talking about. And I think these will actually be valuable to your portfolio. Now, first on the list, we have Alphabet Class A. If you guys are not familiar with Alphabet, Alphabet is simply Google. Okay, they made a parent company. The way certain companies restructure themselves, they may make a parent company, quote unquote, a holding company for tax purposes. This is how they kind of get out their taxes. But anyway, Alphabet is simply Google, but they have two stocks that you probably need to be informed on what the difference is. So the current stock that we're looking at is Alphabet Class A, and then there's another one that's Alphabet Class C. The difference is Class A stocks, you, the investor, for every share that you have voting rights, you have voting power. This is the common stock that when you own shares, you have the potential to vote in people of the board of directors and how the stock should go, who should essentially hire or fire. Believe it or not, and Robinhood actually sends out an email when they have their investors call and offer you to do just that. Now, Alphabet Class C stocks, you just have no voting rights. So you're going to see that the Alphabet Class C stocks, you may profit $1 or more, because essentially they don't want people to vote, potential other people out, so they can make one stock class more valuable than the other. But nonetheless, let's get into the stock itself. For the past 5 years, Google has been up roughly 97%, $48 on profit. But we understand that Google stock was around $2,000 before the split. Now I'll show you very quickly here. And me personally, I don't have that many shares of Google. I used to have 10, then I have like one, I believe, or slightly over one. But it is time to buy a couple more. Now the question is, will I buy Class A or buy Class C? I like the power to vote. So me personally, I'm gonna buy probably 2 Class A here while we're live. Now, so that's the past 5 years. The past year, they've been down roughly 30%. The past 3 months, they've been down around 17%. The past month, around 12%. The past week, they've been down 2.4%. And then in a day, they've been down roughly 1%. But in the aftermarket, they are roughly up 0.14%, which is pennies on a dollar, if that. Now, you see my portfolio here. You see my return. I am down 34%. You will hear me always state percentages versus the dollar, because this is how you can really calculate your money very easily of the amount of return. I'm always looking for a 20% return, which regularly throughout the market for most investors to receive, if you're doing well, is 10%. I like to double that. So that's me paying attention to the way the markets move. But right now, there's really nothing you can really move around that's going to exponentially grow your portfolio unless you have some insider trader notes or some insider trader news, rather. Okay, so that's pretty much their Class A stock in a nutshell. We can go over to their Class C stock, which you cannot vote on, but in the past 5 years been up 101% and roughly $50 in the past year. It's been down again, roughly 30%. 3 month, around 17% again. 12% there the past week, 2.29. And today it's been down again 1% and only up 0.03%. So the Class A stock in the aftermarket today is doing better than the Class C stock. So it's important. We're looking at Google. Anytime you see the Alphabet company, they're talking about Google, family. And that's, again, their parent company that they hold all the conglomerate stocks that they actually bought. And a lot of you may not know how important Google is. I've been saying this for a very long time. Companies like Apple and Google, they own hundreds of companies. And I used to go down the list and kind of read them all, but I'm going to do the top 7 here. I found me a good website. So the top 7 companies here, family, that Google owns that I think that is very important, pertinent for your portfolio is Mandated, which is a cybersecurity firm that they bought out. Fitbit, they bought Fitbit, and that's why with the new Google Pixel watch, the fitness portion of that watch is Fitbit based. Now, from what I'm told, the technology within the Google Pixel watch is not Google Wear. I actually ordered a Google Pixel watch as well as the Google Pixel Pro 7 because I'm a big Pixel user nonetheless. But here's just, again, some of the companies that you may not be aware that they actually own, that Google actually own. Looker, it says here, business intelligence software and data analytics. What do you think they use that for? Do not forget that Google owns YouTube, the very platform that you guys are watching this from. Google owns those things. So they buy these data analytic companies, these intelligence software, to see how you and I respond to certain advertisement, marketing, with videos we like, entertainment, information, education, doesn't matter. You're being watched. But anyway, that's just the truth of the matter. We understand that they bought Nest. Okay. That's why if you look at the older devices that Google first came out, they're just kind of like Google devices. And now you'll see Google Nest Home, Google Nest Wi-Fi Mesh, whatever. They had that little Nest name on it because they bought out the company Nest. It's kind of like Amazon. Amazon owns hundreds of companies. They're another large conglomerate. Amazon went out and bought Ring. So they've encompassed the Ring devices within their plethora of all the smart devices that they have. Number 5, Waze. I know a lot of people love Waze. I hear people talking about, oh, I don't really like Google Maps no more. I like Waze. Yeah, still a version of Google Maps, just different. But they bought the company. DoubleClick, a ad management and serving solution. Ad management. That's when you don't buy like Google Premium and you have those ads. You have to wait 5 seconds and wait 30 seconds. You can thank these companies that they're actually buying, that you guys have to go through that. Then last but not least, as we talked about earlier, was YouTube, okay? 1.65 billion acquisition back in 2006, family. That's how long Google has been owning YouTube, okay? So my pick out of these two, I think I'm going to go roughly with Alphabet Class A, but some people like, hey, I want larger returns, so I'm going to go with Alphabet Class C. But let's just go ahead and do this very quickly. Let me get some money in my account, okay? Put some money in here very quickly. Give me 1 second, family. Some things I have to do off camera because all my information is in here, okay? That's the only reason why you're looking at this. You transfer the money in there, and once the money get in there, put it back on camera, okay? Okay, it has the instant amount available for me. I do a lot of business here on Robinhood. Nope, we're not going to do that right now. So now I have my $200 in here. I'm going to review my order, and I'm going to buy it. So the next time the market is open, okay, this should take place, okay? Uh-oh. Can't show this on camera either, family. Supposedly, I got some sort of Google Authenticator app. These are some of the things you have to go through with secondary authentication, so people don't steal your identity or, in retrospect, steal your money, okay? So let's see here. Give me 1 second. All right, let's see if it goes through. All right, there it is. Average price per share is $98.15. I'm done. Let me do a quick refresh because I think we're still in the post market. So it may take place right now. Let's just check. If not, that will execute tomorrow morning. Okay. All right. Yeah. There we go, family. I'm at 3.3 shares now. Okay. So those 2 shares of Google that I promised I would buy live, there you have it. Let's move on. The next valuable company that's under $100 that you could possibly buy 2 shares from if you go just a little bit above $100 is AMD, Advanced Micro Devices. I've been talking about this company for a very long time. People was really trying to choose between Intel and AMD. Just for the price point, to me, AMD will always be the better buy. That's just in my opinion. In the past 5 years, they have been up 334% for $44 per share. In the past year, they've been down 45%. The past 3 months, 26%. The past month, 32%. The past week, they've been down roughly 16%. And then on today, whether it be the market or the post market, they've been down altogether probably roughly 1.4%. Okay. But nonetheless, this company is still very, very valuable. It's been around since 1969. They have over 15,000 employees, and it states here, and I really want you to key in on this. In the provision of semiconductors, okay, semiconductors. If you guys are not familiar with semiconductors, every electronic device has semiconductors. Your computer monitors, your microphones, your keyboards, your cell phones, your tablets, your TVs, everything has microchips, okay, which are also known as semiconductors. This company is still headquartered in Santa Clara, California, and the 52-week high was $164 per share. Of course, that has dropped significantly ever since this recession. They have no dividends, but their market capitalization, family, is $93.1 billion, a very, very valuable company. And that goes on. I want to really look at their EPS very quickly. Let's look at their EPS, earnings per share. Anything that you have in earning per share that's plus positive is an indicator that the stock or the company rather is in really good shape. And this is what we're looking at right here. That EPS is a good indicator that this company is doing very, very well. Anytime you have those plus positive numbers, and they're at $2.70. That's the earning per share. Again, they're doing very, very well, even though the market is down. And we very quickly, we can look at Google. We didn't look at Google's EPS, but family, Google is doing very, very well. This is the, give me 1 second, make sure. This is the GOOGL stock, and we're looking at 112 EPS. And this is the GOOG stock, and we're looking at 112 EPS. So Google is doing phenomenally well. Now, some of you may not be familiar with our semiconductors, okay? And I stated before, let me blow this up even more. They're in all sorts of electric devices. That's why AMD and other semiconductor companies are very, very valuable when you invest in them. So electronic devices, communication devices, computing, healthcare, military systems, transportation, clean energy, and of course, all other sorts of applications like smartphones, appliances, gaming hardware, and again, medical equipment. Semiconductors, also known as microchips, can be found everywhere. That's the important thing here, family, that when you're looking at companies to invest in, you have to look at companies that people are actually utilizing the products. And these are one of the things that people really don't think about because they're microchips, okay? They're little computing chips. They help electronic devices to perform at a high rate. That's kind of like the Google Pixel's G2 Tensor chip. Is going to save battery, make it compute faster, high resolution, high gigahertz, blah, 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 right? All that good stuff. But nonetheless, it's important that you understand some of the functionality of the products of the stock that you guys are investing in, so you have the potential how it performs, and always keeping your ear to the investment streets and the investment news in order for you to make well-rounded investment decisions, okay? So let's move on. Last but not least, what I have on the list is Van Eck Semiconductor ETFs. Again, we're on semiconductors, one of the most valuable companies And again, I know this is over $100. We're roughly looking at $200. But family, is it worth the money? In my opinion, yes. Let's go over it. So the past 5 years, it's been up 91% at $86.71. In the past year, it's been down 28% the past 3 months. It's been down 11% the past month, down roughly 17% the past week, down roughly 8%, and then the past day, it looks that is down roughly 3.5%. Okay. Now, when we look at this particular ETF, okay, if you guys are not familiar with ETFs, that is an exchange traded fund. So basically, just like your index or your mutual funds, where it has a basket of different stocks in the same industry, in the same section, in the same category. But the difference between ETFs and the difference between mutual funds is that ETFs are passively managed, meaning you don't incur a lot of taxes as you would to invest in mutual funds. I remember people are still talking about mutual funds. And again, family, I'm going to tell you, do not invest in mutual funds because they incur a lot of taxes and they have a lot of hidden fees. Okay. So I know a lot of your 401ks, your RRAs, they put you guys into mutual funds because they shave a little off at the top for the company that's actually holding your 401k. You know, companies like Fidelity, Charles Schwab, companies like that, most likely, the big names, Raymond Edwards, Raymond Jones? I don't know. One of those big conglomerate investment corporations where they're getting kickbacks of some sort to your company, and that's why they have your 401k and also your retirement funds. Okay. Now, this particular ETF has 26 holdings, but they're going to just list off the ones with the highest percentage. Now, unfortunately, AMD, in my opinion, don't have a big stake in this. You may not even see the name on the list. They don't have a big stake within this ETF, but you get to invest in a plethora of different semiconductor stocks all at the same time, which decrease your risk of you essentially losing money over the course of time. The only reason why this is rare is because the market is down. So essentially an ETF, they're not even performing well, or index funds, which is expected because on an average return yearly of an index fund, you're looking at around 7%, but you're not even receiving that right now. But nonetheless, here's some of the stocks that are contained within this fund. We're looking at Taiwan semiconductor manufacturer, NVIDIA. A lot of you guys, if you're on a laptop, you probably can just look down in your lower left. It may even say NVIDIA or GeForce or what's the other large graphic company? There's another large graphic company out there. AMD. AMD. There you have it. AMD. Texas Instruments, Qualcomm. I know a lot of times we used to buy the Nokia phones back in the day or the Sony Ericsson phones back in the day, and they had the Qualcomm sticker. Qualcomm is still a big giant in the semiconductor world. Okay, you have Broadcom, ASML Holding, Micron Technology. Micron Technology is another large, humongous semiconductor user and producer. You have Analog Devices, and you have Intel. And I know you guys are familiar with Intel. You see the little sticker on your laptop or your computer, so you are familiar with that. And then Applied Materials, okay? Here are some of the key statistics that they're stating. Within the 52-week high, we're looking at $318. So essentially, family, this stock has went down, what, 100 some odd dollars, because the day high is only $188, and roughly currently in the post market is roughly 178. We'll look at it again, but nonetheless, the 52-week high, this stock went up to $318, and this is an ETF. And the great thing about ETF, you have a low expense ratio, the amount of money that you pay to actually have this stock in your portfolio, which is a lot less than other stocks. Okay. And then you see your 30-day year at 1.19%. So all of these things are looking very, very good. So let's look at the EPS. Let's look at the EPS here. SMH, shaking my head. And the EPS is not even computed right now. Let's see what they're stating here. It says that the EPS, earning per share, indicates how profitable a company is on a per share basis. EPS is calculated by subtracting any preferred dividends from a company's net income and dividing that amount by the number of shares outstanding. So this site right here, They have an EPS. They just don't have the EPS listed. Okay. But nonetheless, that's kind of where I think you should put your money at right now. I mean, take it with a grain of salt, family. But I think those 4 stocks will probably be the most profitable here in the next year or two. And most likely, if you're not in your 60s and 70s, you guys should be investing like crazy. Now, again, as you guys start to get older, you want to start putting some of your investment money in safer investment engines, whether it be bonds, ETF, or index funds. You want to start to really safeguard some of your finances. But when you're in your 20s and 30s and 40s and 50s, that is really, I believe you should be aggressive, because that's when you can make the most money. But as you start to get older, you start heading towards retirement, that's when you really start safeguarding your investments and your profits. Okay. Let me see what you guys are saying in the comments here. I see Jay Darnell, Jermaine Anderson. Good evening, everyone. Thank you for joining me here today. But with that being said, this is Financial Literacy 101. Learn money and be inspired. You guys have a great and wonderful day, and I'll see you on the next one. I'm out.